Alright, so hi guys, welcome back to PKFX YouTube trading channel. So this will be the usual trade recap and lessons learned, and I'm updating my trading journal. As we can see, I've completed pretty much 60 trades, well 61 to be exact. And this last 15 trades, I would say it's pretty decent. I've had more wins overall compared to losses. And if I look at just the last 15 trades, or let's just say 16 trades, right? Overall, it has been more towards in profits. So it did help to catch up to the previous losses as well. So I'm going to walk through one by one again the trades just to recap what I did and what I've journaled so that I can learn from this 15 trades and make some improvements the same way I was doing from trade 1 to 15, 15 to 30, 30 to 45, and now pretty much from 46 to 60 or 61. So I'm gonna batch them every 15 trades or so and try to learn from the previous mistakes and keep improvising. So yeah, without further ado, I'd like to start off with my first trade, which is Euro JPY. So this trade ended up as a win, but not entirely. So what I've written over here for this particular trade, first of all, the chart. So this was the trade that was taken where I entered over here, and immediately upon entering, I can see that the market went down for a very good pullback. In fact, it almost wicked me out. Lucky that the stop loss was placed below this area of interest, so I had decent breathing room. The market did wick out, but the 4-hour EMA came in as a support. Eventually, it curved back up and it rallied all the way up here. And I can see that the reason that I closed this particular trade, though it didn't reach my 1 to 2 risk to reward, is because the 4-hour eventually shifted over here, changing the probability itself. And I believe that was the reason in why I closed this trade. I would say overall it was a good trade. Should I hold this trade continuously until it hit the TP? I could do that, but when I saw the 4-hour shifting, I decided to close the trade because I wanted to protect my capital and protect the small profits that I've already made and redeploy that in a better trade where the probability has not shifted yet. Now let's see what I wrote over here. I said the emotion was calm as I was only risking 0.5%. Trade reason, the weekly, daily, 4-hour, and all the lower time frame as well was a buy, clear 30 minutes engulfing candle, so broke above the area of interest and made a decent pullback with a bull flag pattern. What can go wrong? I mentioned deeper retracement to retest the daily EMA and can hit the stop loss. 55 pips given should be sufficient. And the result, trade rallied to the buy direction by making 4-hour higher high continuously. However, halfway through, after making a new daily candle close higher, the 4-hour candle started forming a rollover pattern that was showing the 4-hour shift of structure into a sell. Decided to close the trade in small profits as the probability has now shifted. And that is exactly what happened over here, and that's what I did. And I closed off the trade. Now, I could see that if I continue to hold this particular trade, it would have probably hit my take profit as well. And this is pretty much where the decision-making process comes into play. Most probably, I would have held it all the way up here. This could have even been, if I were to pull this up here, pretty much like a 1 to 3 risk to reward. But then again, the shifting of the 4-hour was a decision for me, and at that point of time I felt that it is right for me to close the trade, and I did. It could have also been a loss like what happened over here, right? So we got to stick to the plan, right? So my plan was stick to 1 to 2 risk to reward unless the probability shifts, and even the probability, it's not really the lower time frame, but if the 4-hour is now shifting, then it's most probably going to impact my trade. So this is one of the cases where I closed prematurely, I would say, but the market still went to my take profits eventually, not immediately, but it took pretty much quite some time before hitting the 1 to 2 risk to reward, right? So that was Euro JPY. Regardless of that, it was still a win, so I've closed that trade in a win. And next was USD JPY. So yeah, going straight to the chart. So This is pretty straightforward in the reason in why I took this trade. This was a bit risky. By right, I see that my entry point is because the 2 hour created this strong wick over here, liquidating all these traders over here, and then the next candle pumped towards the upside. So when I saw this 2 hour wick towards the downside, holding the 2 hour EMA, and the next candle pumped towards the upside, giving me a beautiful shift of structure as well. I decided to make this as my entry point, and what we can see is that after it just held all the way and it rallied all the way to TP. So this was a beautiful trade. It is risky because by right, I'm buying at resistance. I should be buying at support, meaning to say the trade has to come back down. If it rallied, it has to come back down before I buy for the entry. But I entered purely because I saw this week to, pretty much liquidate all the traders down here, and then the push and the shift of structure over here indicating that the market is definitely going to push towards the upside. So this was my entry point, and I held to the trade, and it ended up as a winner. So let's see what I recorded over here. So USD JPY, emotion was calm as risking only 0.5%. Trade reason, weekly, daily, 4 hour and all lower time frames was a buy. Expecting a continuous push towards the upside following the trend. And what can go wrong? A better entry point is to wait for the 4 hour candle to break above the daily area of interest, and then enter on a pullback confirmation. So if I look back over here, the right thing to do is let it break above and then a pullback and I enter. But if we look at it, we never got the pullback except for this one particular wick over here that most probably I wouldn't have entered as well, because this was very quick, very immediate, and no shift of structure. So I'm glad that I entered over here, understanding the risk involved. I never got back the pullback, and this trade I would have missed it, but it ended up as a profit for me. So yeah, but I jumped in after the 2 hour shift of structure, as the 2 hour candle before did a doji and grabbed the liquidity and bounced off the EME. Sufficient stop loss of 47 pips, where if it hits, I'm completely wrong. So what I'm saying is I did place good amount of stop loss below this area and below this weak point as well, so that if I hit, I know that it's gonna reject over here and go towards the downside, right? So that was good. The results, the 2 hour doji liquidity grab was indeed a good entry point, and the market created a bull flag in the 2 hour and broke upwards and hit my take profit. Moved my stop loss to TP at 1 to 2.37 risk to reward after another 2 hour bullish candle printed and closed. Plan was to continue holding the trend as swap was positive, monitoring the 15 minutes candlestick. Unfortunately, market came down and wicked me out at TP while creating the next bullish flag pattern. Overall, this was a good trade, trading with the trend. So yeah, I moved my stop loss over here and I got wicked out in this candle over here. That was the reason. If not, I could have rallied even higher. But it is what it is. I'm happy with this trade. It was a win. Moving on to the next trade, NZD USD, which is also a win, but at a very small win. So let's see this particular trade. Okay, so this trade, NZD USD, I went in for a sell for this trade, and looks like I closed it prematurely before it hit my take profit. And I mentioned here clearly that the reason was I closed due to upcoming potential FOMC that can potentially reverse the trade. And I saw that the market was pretty much just struggling over here. Well, again, there's no really any reason for me to actually close this trade, because I entered this trade and the 4 hour EME is still holding, and the market is actually pushing towards the downside. But I see that it has been ranging over here for quite some time, and I'm on profits, and potentially a big news is coming up. FOMC was coming up, so I decided to close over here, and that was the reason in why I closed this trade earlier. So what I mentioned over here, weekly and 4 hour was a sell, lower time frame all sell. 4 hour broke below the area of interest and pulled back to retest and rejecting along the 4 hour EMA as resistance. So it did break below, came back and retest this area, and then started moving back down. So this curvature over here, with the EMA coming in as a resistance, with this area of interest coming in as a resistance, was my entry point over here. This is a good entry, right? So I mentioned over here, 2 hour sell made stash shape pullback and now rejecting around the EMA as well, expecting market to roll over into a sell. I like this trade. because weekly strong candle rejection and rejected off the weekly EMA and closed below the weekly AOI. This was also rejection from weekly previous structure point. So I have quite a bit of confluences over here. What can go wrong? Daily is still a buy. Daily candle did break below the area of interest and now pulling back, and can be at a decision point to hold the daily EMA or to fail and roll over. So the results, the trade was going well up to 1 to 0.66 risk to reward, where the lower time frame all shifted into a buy. So you see here the lower time frames, right? 30 minutes, 1 hour, 2 hour, all shifted into a buy, and I'm into a sell, and FOMC is going to come up as well. It came back to retest the 4-hour EMA and rejected of it and continued the downtrend that shifted back the lower time frame back to sell mode. So it's back in my direction. I did not want to risk holding further as FOMC was coming up and potentially rate hike was in play this time. Decided to close in small profits and secure the win first and let FOMC news pass by. So that's what I did, and let's see what really happened. So this was the trade. This is where I closed, and guess what? The market literally reversed back and I would have hit my stop loss. So that was actually a fantastic close over here. And the market really, that was the bottom pretty much at this point before the market reversed. So I would say I was lucky enough to understand that the news is coming out, and I did close, and it did save me out of this capital, risking this capital. In fact, I got out with a very small profit. So I would say this is pretty much a decent trade. The right thing to do is, of course, you let the trade play out as it is to obtain the best possible probabilities. But sometimes if you have an advantage of the news and you don't want to risk your capital because of some unexpected news, might as well you close it out and let the market play out, and then later you see for better entry, right? Can FOMC push me directly to my take profits? Yeah, probably. This is a risk. If you're willing to take, then you can go ahead and continue to hold. This trade, the way it moved upside because of FOMC, could have easily moved downside as well and hitting my TP, in fact giving me more than 1 to 2 risk to reward. End of the day, I just didn't want to risk for a trade that is moving because of the news, and I want to be the reason for the trade to hit my stop loss or take profit is because of technical reasons, so that it is more sustainable in the long run. And that's why I closed this trade. So yeah, this trade also a very small win, but a decent win. Moving on to the next trade, which is gold. Now this was also a very good trade, which ended up as a win. So for gold, so this is the trade, and I had a daily trend line over here, downtrending trend line over here, and I saw the market was testing this trend line. Actually, it did test before, break before, came back, pull back, and then broke below again. So it came back again up here, test again, and it was breaking below and again breaking below. So I saw this pattern before this, and I was expecting the daily trend line to continue to hold and the market to eventually push towards the downside. So the moment I saw the lower time frame breaking towards the downside, shifting the structure into a sell, I decided to enter here, with the stop loss being above this trend line, above the structure point, and above this wick over here. It's pretty decent trade, I would say. Though technically I'm actually selling into support, which is not ideal, but I was expecting the market to break this and at least go down to 4,000 once again. So I went for this trade, and yeah, it ended up as a win for this particular trade. So not much to discuss here, just very quickly what I recorded over here. Emotion, I was calm. I risked 1% for this trade. Trade reason, weekly is a sell. Daily long-term trend line has indicated resistance in the past. And previous attempt to break this had a strong rejection, turning the 4-hour buy momentum back to sell. I aimed for another retest of similar trend line to have another push to the downside. Entered based on 30-minute shift of structure and 2-hour engulfing candle. So this was good. This was pretty good entry points, the 2-hour engulfing candle as well. Also, I see similar sell pattern for the USD pairs, expecting similar move to the downside. What can go wrong? Daily is still a buy. Entry is technically above the area of interest. Stop loss 40 pips is based on maximum I can scale without risking more than 1% per trade. So this is also one of the reasons why I'm slowly growing my trading account by topping up my account every 15 trades or so, because I want to have trading account that is large enough so that I can set the stop loss where if it hits, it's completely wrong, and not because 40 pips is maximum I can set for gold, right? Without risking 1%, right? So if possible, without risking 0.5%, right? So for that, I'll continue to grow my trading account by adding more capital into it. Now, so it's not proper stop loss position sizing yet, but I gave about 20 pips above the 30 minutes highest wick. So that is good. That should be sufficient. And the results, trade ended up hitting my tick profits 80% through the process. The lower time frame, 30 minutes, 1 hour, 2 hour, did turn into a buy. I decided to hold because I understand that the market has to pull back to retest the area of interest from below and reject before continuing the trend downwards. So what I was saying is, when it was going down at one point of time, it did shift back again into buy, right over here. But I understood that it was just retesting this structure point. Therefore, it is shifting the lower time frame, but as long as the 4-hour time frame and above is still a sell, I'm good. So it did exactly that and eventually pushed to the downside. So this was a fantastic trade, right? So yeah, I decided to hold, and then the market has to pull back to retest, and upon hitting the TP, right, I pretty much moved the stop loss to take profit, but I did not want to risk holding further as FOMC was coming up as well, and a potential rate hike was in play. That was probably the reason in why gold was dumping. But I suspect they may just hold the rate constant, and this might push gold up, back again. Do not want to give back the profits due to news. Hence, I closed at a 1 to 2. It was overall a good trade. So looking back at the charts, this was the trade, the gold trade, and this is where exactly I closed. And once again, this was because of FOMC, and that's exactly what the market did. It literally reversed up back again. And if I were to hold this trade, I would have hit my stop loss pretty much. But I took a beautiful 1 to 2 risk to reward and close it right before FOMC. So this was an excellent trade, I would say. And yeah, that was a win for a gold. So moving on to the next trade. Okay, so this trade, Euro USD. So this is a trade that I closed in break even. So nothing much to discuss over here. Just the point that I want to notice is this was a counter trend trade, and I only had like 55% confluences for this trade, and I closed it in a break even. And the reason I gave over here, decided to move the stop loss to break even to protect the capital. Reason is because I entered this trade based on 30 minutes shift of structure to sell. But after moving in my direction, the 30 minute shift of structure back to buy again without durably breaking below the area of interest for a good comeback and retest. Also, market started ranging at the bottom part of the area of interest, indicating to me that area of interest is still acting as the support that can eventually push the trade to the upside. Since it's a counter trend trade with low confluencer score of 55%, I decided to protect my capital first and use that for other opportunities. So to look at it, basically, yeah, the market I entered based on the shift of structure into a sell, and the market did go down, but at this point of time it shifted back again into a buy, and then the market started ranging down here without actually like durably breaking below and coming back for a retest. If it's just buffering below here, then most probably this is holding as a base, and that's why I closed it when I saw the market was pushing towards the upside. And yeah, I closed it in a break even pretty much for this trade. And if I want to look at the actual chart, what happened next, so this was the trade, and yes, the market was just trying to break below, but eventually buffering and started coming back up, and I closed it at a small I closed it at a break even. And as we can see, if I chose to continue to hold, the market would have eventually hit my stop loss as well. So yeah, it was capital protected, so no regrets with that. And I will just move on to the next trade, which is pretty much another win as well. This is a GBP CAD. So CAD. So this trade, I would say I closed in a very small profit, more like a break-even kind of stuff. But there is a lesson learned over here. So just to very quickly look at the chart, this is exactly what happened. So I placed my stop loss over here, and looks like the stop loss was hit. And eventually this trade did go into my stop loss over here. I did close out over here, so that is good. So I did not risk the entire capital. But I see that there is a beautiful reversal over here happening at the 4-hour, and I had an opportunity to close here when it was reversing. but I did not, because technically the 4 hour did not shift yet, the structure. But this is usually a topping signal, mainly when it's trying to push towards the upside. So forming a topping tail like this usually indicates that, hey, the market is going to reverse, right? So let's see. I mentioned over here the emotion is calm as risking only 0.5%. Trade reason, the weekly, daily, 4 hour, 2 hour, all was buy. Weekly had a head and shoulder retest neckline done, and I see it's moving upwards. I was waiting for a pullback on a daily back to area of interest, but I see 4 hour and 2 hour curvature taking place with 30-minute shift of structure, and 2 hour engulfing and 2 hour EMA coming in as a support. Decided to enter on a pullback. So what can go wrong? I mentioned here, market can still pull back to area of interest. This will mean 4 hour will turn into a sell and the previous rollover was a fake out. So yeah, that is essentially actually what happened thereafter. The market did pull back to the area of interest. So this rollover over here upwards was good, but this rollover was bad over here, right? So market actually ran all the way almost to 1 to 1.75, but the new 4 hour higher high made was not significant push to the upside. Next 4 hour candle formed a topping tail pattern, which usually indicates forming a local top. The following 4 hour candle printed the bearish curvature to the downside. I moved the stop loss to a small profits. Next, the 30 minutes, 1 hour, 2 hour shifted bearish, and the market eventually dumped. Lessons learned. If you see a topping tail candle forming at the top point during a rally, and then the next candle is creating a curvature to the downside, you can consider closing the trade as the possibility is shifting. No need to wait until the lower time frame shifts. You can close if the 30 minutes shifts so that you can secure as much profits as possible. So what I'm essentially saying is, after making this new higher high over here, right, the next higher high was not significant, right? Like from here to here, that was significant. From here to here, that was not significant, followed by a topping tail, followed by another candle that closed like this, bearish, and the lower time frames are shifting as well. You do not need to wait for this huge candle to dump downwards, right? You could probably close it over here. That's what I'm essentially saying. But I didn't close because I still follow my rules, where if the 4 hour did not shift of structure, then I don't close the trade. It could always come back to retest these structure points over here before a bounce towards the upside. But yeah, this case, it had way too many indications that it's going to roll over and go down, and I had opportunities to secure more profits. So in the future, I can even consider securing more profits if I see the lower time frame is shifting and the 4 hour time frame is forming a topping tail. So that's a GBP CAD. Moving on to the next trade, this was also a win. This is gold, and this was a beautiful 1 to 2 risk to reward win. So looking at the trade, nothing much to discuss over here. I would say this is clearly the daily trend that was broken, and the market pullback to come back as a support, right? And upon this push towards the upside, I clearly already predicted the market to do this, to bounce against this area over here that is going to act as a support. I placed good amount of stop loss, and the next few candles literally printed bullish, and the market literally flew. So it was a beautiful 1 to 2, could have been even bigger. I decided to close over here, and that is what it is. That was the trade. So I don't want to go through in detail, but this was a win. But what followed is what I need to go and check. This is a gold trade for a sell, right? And this I actually took a loss. So this trade, so this is probably the most important lessons learned over here. What happened is gold was having an incredible rally towards the upside. The 4 hour and the daily was extremely strong buy, and the weekly was still a sell, right? So at that point of time, I was trying to actually short the market, even though there was a strong uptrend on the daily and the 4 hour. So I waited for a shift of structure, but ideally I should have waited for the 30-minute shift of structure. But as this candle was actually printing towards the downside, before even the candle closed, while it was printing like this, I had the fear of missing out, FOMO, kicking in. I had anxiety, and I actually jumped into this trade, and I went down from 30 minutes to actually 15 minutes to look for some sort of confirmation to say that, hey, to justify that I'm entering here and it is all good. And what happened next is obviously The next 30 minutes candle literally shifted. The market never really closed below this 30 minutes EME. It pulled back and closed in as a doji, and the next candle literally reversed to the upside and hit my stop loss within 30 minutes before even I could able to journal this trade. So I would say this was a terrible trade, and I was getting back-to-back wins, and probably I became overconfident over here. And that is something that we need to face as a trader. Every one of us, when we start having this losing streak or this winning streak, in this case, in my case, it was a back-to-back winning streak, uh, got me overconfident, I would say, and I started doing things that is not supposed to be done in that way. For example, going down up to 15 minutes candlestick to look for confirmation. But actually, I'm not scalping, I'm trying to day trade or swing trade, and 15 minutes is way too small of a time frame for me to look for confirmation to hold a trade that I'm going to potentially hold for the next few days. So I want to look at minimum 30 minutes or 1 hour candlestick as a lower time frame for a shift of structure, for a confirmation. And the bad part here is I even drew this line clearly indicating that, hey, if I break this line and I confirm this line, the 30 minutes, 1 hour, 2 hour, all of it, the structure point is here. Despite marking all these things, I still went down to the 15 minutes and entered based on the 15 minutes. So that was not good at all. And that's why I marked this trade as rate, because the confluences was not that great as well. It was 60%. But most importantly, let me just quickly go through what was the lesson learned over here. So emotions, I was risking 1% for this trade. I had my FOMO kicking in, fear of missing out. Trade reason, this is a bad trade. Technically, it's a pro trend trade because the weekly is still bullish, right? Sorry, the weekly is still a sell, right? So technically, it's a pro trend trade, but the weekly candle broke strong with a bullish engulfing pattern, which if it closes Friday will make the weekly buy. So weekly was about to turn into a buy, like most probably going to turn into a buy, but I was going for a sell thinking that it is a pro trend trade, right? Also the daily, the 4 hour, the 2 hour, the 1 hour, the 30 minutes, all are a strong buy, so can be considered a counter trend sell. My plan was to wait for the 30-minute shift of structure that will provide proper break below the 30 minutes EMA as well as confirming the direction. The same breakpoint will also shift the 1 hour and 2 hour candle if closed below as sells. So many confirmations that I was waiting. But what I did was, when the New York session volume kicked in, I got fear of missing out as the 15 minutes candle printed below the 30 minutes EMA and that I may miss the entry. So my confluence was based on 4 hour area of interest, not per plan, and 15-minute shift of structure and 15 minutes engulfing. This is way too small for a trade that I'm going to hold for the next few days. Since my judgment is not based on my original plan, I mark this trade as a bad trade as it was emotion driven. What can go wrong? The stop loss placement, since gold is risk is limited to 1%, the stop loss is not placed at a point where if it hits, I'm completely wrong, right? This is a very risky trade, and the results, market never gave me the 30-minute shift of structure, and the market held the 30 minutes EMA and immediately reversed to the upside and hit my stop loss the very next candle. This was a stupid mistake purely out of FOMO. I waited patiently for so long only to mess up last minute during my entry. My emotion was angry. I actually felt that my emotion was angry at myself after the trade. By right, I should stop trading for the week. Lesson learned, never use 15 minutes as confirmation. It gives too many unreliable shift of structures. Remove from trading view, time tab, make it mechanical to only check 30 minutes as lower time frame. Do not trade using the 4 hour area of interest. This is not as per plan. So that's what I did. I eventually removed this 15 minutes bookmarked timeline so that my lowest time frame would be 30 minutes, and that's what I've been implementing now. And I'm no longer playing with the 4 hour area of interest. I'm sticking to my weekly and daily, and that was the lesson learned. The most crucial, I would say, the most important lesson learned out of these 15 trades, where gold trade that came in right after back-to-back wins that I jumped in out of FOMO and took a loss. The next trade was also a gold trade. So this trade is essentially the same trade that is being repeated over here. In fact, I mentioned over here, this is a repeat of the previous trade, but I'm finally taking it as per plan. I took it after a few hours when my emotion is back into calm, I have a 30 minutes and 1 hour shift of structure and 1 hour engulfing candle to confirm the sell direction. I did not look at the 15 minutes. My emotion was completely calm as I understood the previous mistake and I entered a decent trade. The 4 hour area of interest in this case is a valid area of interest. Ideally, try to skip working with the 4 hour area of interest and stick with the daily and weekly area of interest. And all I could see is, yeah, I entered this trade for a sell and eventually market moved to the upside. But yeah, this was supposed to be the loss, not the previous one. That was purely out of fear of missing out. But one thing I can say is, once again, I'm actually selling into support, which is not a good idea. Ideally, I should wait until the market pretty much breaks below and then pulls back for a retest, and that's when I enter, right? So if I zoom out over here, this is still the same. I'm pretty much selling into support. So the stop loss is getting hit is pretty much not a surprise, right? And I mentioned over here, results. Market shifted back the 30 minutes after shifting into a sell, shifted back into a buy, right? And made a new 4 hour higher high. Basically, I was selling into support. Wrong move, right? So again, this could have been probably induced due to the back-to-back wins. Now I had two back-to-back losses that wiped up quite a bit of a win over there, and out of which one was a calm trade and another one was out of FOMO. But if I really look back at it now, even this calm trade, I would have been able to detect that, hey, I'm actually selling into support. That is a wrong move, right? Though emotion was calm, but judgment is affected. Next time, don't trade after a bad trade. Let the market play out and come back next week. There will always be another trade. So that is another very important lesson learned that I took from this particular trade of gold. Actually, I've been making a lot of gold trades, and some was a win, but quite a bit as a loss as well. So I would say 50-50, right? Moving on to the next trade, which is AUD CHF. So AUD CHF, this was a pro trend trade. I was only risking 0.5%. All time frames in sync. Weekly candle rejected previous structure point. 2 hour had the liquidity grab. Wick up to EMA, that's acting as a support and pushing upwards. 2 hour inverse head and shoulder formed. Stop loss set in place where if it hits, 4 hour shift sell, and I'm completely wrong. Also below area of interest and below the 2 hour EME, 24 pips, giving me a potential of 1 to 4. So this one I can go directly to the chart over here. Essentially, all the time frames was buy, and I saw this potential move towards the upside, and I entered this particular trade, and I wanted to hold this trade all the way up to 1 to 4 risk to reward. But unfortunately, when the market actually pushed towards the upside, the next candle printed as a sell engulfing candle. And what I did is I pretty much decided to close the trade because I can see that, hey, this area is coming in as a resistance. In fact, when this 4 hour candle printed above, bullishly like this, the pullback, I entered another ADCHF over here, right? But upon entry, unfortunately, this trade, the lower time frames also shifted into a sell, and eventually this did hit my stop loss. This trade, however, I managed to secure when I saw this 4 hour shift of structure. I closed it at a 1.63 risk to reward, and that's essentially what the market eventually says over here. So yeah, that was the win for that AUD CHF. And the other small trade was pretty much this one over here, trade number 59, that ended up as a loss. So I already covered that and this as well. I'll just move to GBP CAD for this particular trade. Okay, so GBP CAD, this was the trade over here. I see that I'm buying the pullback over here, the pullback towards the area of interest and a bounce, and that was my entry. I entered over here, but looks like it was an extremely strong rejection of a 4 hour candle. So the lower time frame shifted buy, but eventually shifted back into a sell. And yeah, the weekly and the daily was bullish, but the 4 hour was still a sell. I thought that it came back to retest this area before pushing towards the upside, but unfortunately it hit my stop loss. And in terms of the journaling, I actually mentioned over here that for this particular trade, GBP CAD, right, the emotion was calm as I was only risking 0.5%. The weekly daily is buy with a decent pullback, retesting the round psychological number of 1.88000 and now broke above the area of interest with 30 minutes and 1 hour shift of structure and 2 hour engulfing candlestick directing to the upside. So I did get my lower time frame entry point, which was the reason to enter. But unfortunately, let's see what can go wrong. Stop loss 50 pips placed below the 4-hour lower low, but still within the area of interest. Possible for the liquidity sweep. I am aiming for a decent 1 to 2.5 risk to reward. Market eventually rolled over on the 4-hour time frame to make a new lower low, hence hitting my stop loss. So this I checked and it was not preventable even if I make this 1 to 2 and pull the stop loss slightly below, because in actual fact what really happened is the market indeed went all the way down here, even if my stop loss was more than 50 pips, and if it was almost like 75 pips, I would have still been stopped out and the risk to reward no longer makes sense as well. So it is what it is. I took the loss and I record it as it is, and I move on to the next trade, which is pretty much gold once again. So this trade, I don't even need to read the journal. It is very clear that this was a fantastic trade that almost went to my take profit, just like 1 to 2 pips below, and unfortunately the market reversed, right? So technically this trade already played out. It should have been a winner, but unfortunately it turned all the way back down, and I closed it at a very small profits rather than risking back the capital, because looks like it was coming down to retest this area of interest for this particular trade. Entered back again this trade, right? So this was the previous trade that I closed in, and the market at the end did indeed push towards the downside. It would have taken my stop loss, but I closed it already. But when I saw the shift again, I entered back again. It is essentially the same trade. Unfortunately, once again, the market rallied all the way close to my take profit, and I did not close the trade yet. And the next candle printed an extremely strong bearish engulfing candle, and thereafter started buffering over here, shifting the lower time frames all into a sell. And I moved my stop loss over here, and I actually got wicked into the stop loss. And yeah, both the trades did not, potentially could have hit 2 wins over here. Unfortunately, I was not lucky enough that this trade came all the way close to 1 to 2 and then eventually reversed on me. So that was the 2 trades over here. That was this gold trade and also this gold trade that I barely took a decent win. I would say it's not a break even, but it is a small win, right? Uh, just to highlight what gold did thereafter, yep, it flew all the way up, only after faking me out twice. And after I got wicked out over here on my stop loss, without hitting my actual stop loss, the market eventually rallied all the way up here. And in fact, it broke this area as well. And right now, gold, as we speak, is continuing its trend towards the upside without even stopping. So this was purely news driven, based on what just happened recently, the past few days. So I could not have predicted this move, and that's okay. That's completely fine. I have learned to accept that this kind of things can happen. The market can just leave you behind and rally all the way up, right? After mainly after faking you out twice, right? I'm glad that at least I managed to close these 2 trades in a small profits rather than losing the capital twice. Uh, I did try to short the market thereafter. That was this particular trade, trade number 61. Sadly, that was a wrong move, I would say. This particular trade, I was trying to catch the top, to be fair, and that was a wrong move, because the market was pretty much bullish, weekly bullish, daily bullish, 4-hour bullish. All the lower time frames were bullish, and I was waiting for a shift, a 30 minutes candle shift, and I did get that. The 30 minutes did break below, and I got 1 hour engulfing candle. And as you can see, I entered based on this round psychological number of 4,500 to hold, and I saw multiple wicks and a curvature over here, right? And I thought this was a good counter trend trade to go for a sell. But yeah, if I really look at it, this is like catching a falling knife only towards the upside, right? The market is literally pumping towards the upside, and every single time frame is saying it's going to keep going upside, but I'm trying to go for a counter trend trade just because of a 30-minute shift. That's very, very risky. And what happened next is the market printed the next 30 minutes candle that engulfed this candle and broke the structure back again into a buy, and within 2 hours it hit my stop loss. So I wasted 1% capital over here, and that's when I said, you know what, I'm done trading for the week, and I've reached my trade number 61. It's time to recap for all the lessons learned. So that was this particular trade over here. um, I mentioned clearly I risked 1% for this trade. Emotionally not completely calm. Reason, buy gold twice as pro trend trade, and market rallied close to take profit but then pulled back, and I closed in very small profits. Later news came out and gold rallied all the way to 4,500, which I was aiming for so long. So a little bit of, emotionally I was not intact, I would say that. So I journaled that. Trade reason, I entered based on anticipation of reversal of round psychological number of 4,500 as resistance, and looking at the market wicking near 4,500 and curving down on 30 minutes, and immediately entered the counter trend trade. Took the 1 hour doji and reversed, closed as engulfing near the 4,500 for a potential sell. What can go wrong? Well, this is a bad trade. Only 30-minute shift of structure sell, but all other time frame was a clear buy. A little greed was involved as trying to catch a falling knife. Stop loss placement is within area of interest, and it was not sufficient. After the 30 minutes shift of structure, the next candle, 30 minutes candle itself, printed bullish and shifted back to buy, invalidating the whole trade. Market hit my stop loss within 2 hours. Lesson learned. When you see a strong trend on gold, don't just rely, not just gold, like any other trades, right? Don't just rely on 30-minute shift of structure for mainly entering the counter trend trade. Wait for the market to slow down. You will end up wasting capital if you keep trying like this. It is actually not worth it, right? So what do I mean by falling knife? This is the chart right now, and if I choose to inverse this particular chart, and I can see if I invert the scale, this is like literally dumping, right? And what I did was I just tried to enter the trade uh, while it was actually falling towards the downside steeply like this. I said, you know what, it's going to go up back again. So yeah, when I shift it like this, if I invert the scale, it does not make sense at all to be buying over here before even getting some sort of confirmation. But at least if you are buying over here, it can make sense saying the hey, it's bouncing, right? But I essentially bought it over here, and I pretty much got, it was just a week over here before the market continued the trend towards the downside, which is basically catching a falling knife, right? And if I invert back the scale, that is essentially what I did over here. And I took a loss for no apparent reason, knowing that the market was pumping like this. I should have just stayed out. If I'm not going with the trend, a counter trend trade is extremely risky, and that's what happened in that particular trade. So yeah, that was the two gold trade, and also the third one that was not a good trade. Last two trades, AUD CHF. Now this particular trade is the same trade that I mentioned just now. That was this, that I entered based on the 4 hour engulfing candle, but upon entry, which I thought was just a pullback, ended up being a 4 hour engulfing candle that engulfed it and changed it into a sell. And I committed to the stop loss over here. Though I closed this trade, I maintained this trade. Eventually, obviously, it hit my stop loss as well. Could I have closed this trade over here? Yeah, but I decided, you know what, I've already secured this profits. If I'm risking the stop loss over here, I'm risking back the profits. So let's see what happens. If there's a chance for the market to just grab the liquidity and push towards the upside, at least I get to hold this trade. But that was not the case. The market did indeed dump towards the downside, right? So yeah, that was that trade. And finally, GBP CAD. So GBP CAD, this is an excellent trade that pretty much can go wrong, right? So this particular trade I mentioned over here, emotion was calm as I was only risking 0.5%. High time frame and lower time frame all shifted by. Excellent confluences. It was 110% from now mistaken over here, 110%. Buying at strong support, we take profit set at previous weekly structure point and stop loss below the area of interest, and 4-hour lower low where if it hits, I'm completely wrong. Daily candle curving upside showing EMA holding. And what can go wrong? Market haven't clearly broken above the area of interest yet. Market currently challenging the 4-hour EMA, which is acting as a resistance. No 4-hour rejection candle yet, no engulfing candle confirmation yet, only shift of structure. So this was the trade, and I saw that the market was trying to break above. This is the 2-hour, right? And the market did create a beautiful shift of structure, 2-hour engulfing candle that moved towards the upside. And I entered before this trade actually. I entered over here when I saw the lower time frame all shifting, the EME coming in as a support, and after entry, I got this 2-hour engulfing candle that was pushing towards the upside. But unfortunately, this was also news driven, and the next candle printed and engulfed this engulfing candle. I see time and time again something like this happening during news events. This engulfed this, but I was still in the trade, right? I was still in the trade, but unfortunately, I actually got wicked out due to overnight swap. So what happened over here? I mentioned here, got wicked out during overnight sudden high swap GBP CAD of 337, while I was only down 50%. So the market was just buffering over here. But at at the end of the New York session at 5 p.m. or 12 p.m. my time, the market pretty much closed, and suddenly I had a very high charges, and it just hit me to my stop loss, right? So the right word is not swap over here. This was spread. Yeah, the overnight spread, not swap. The overnight spread charges that went up to 337 pretty much, took me out at a stop loss. I just waited to see what happens next, and eventually the market did hit my stop loss after the market reopened back. So no matter what, this trade was meant to be a loser. But yeah, I was pretty much wicked out during the midnight itself, sadly, and this trade ended up as a loss. So yeah, that's about it, guys. That's the trades, and that's the trade recap and lessons learned. I would say it was a good one because now I see that after the 45 trades, trade number 46 up to 61 overall, I'm in profits, which is good. I'm going to try to do better and better moving forward, and we'll keep journaling this as it is. And as usual, since I've done another 15 trades, I've added another $500 to the capital so that I can keep growing my portfolio through this capital allocation from time to time as I'm learning as well, so that I can allocate even better for the trades and take bigger sizes, slowly growing the trading portfolio, right? So yeah, that's about it, guys. That's pretty much it. Looks like the trading journal is going well, and I've been tracking this so far so good. And I hope this has been very useful to you guys out there who's trying to journal as well and try to improve as a trader as well. So thank you so much for your time, guys, and have a good day. Take care. Bye-bye.